Most people are overpaying their taxes and they don't even know it. Are you one of them? You are probably familiar with the basics, RRSPs and TFSAs and the usual deduction. But what if I told you there are hidden tax saving strategies that could save you thousands each year and most people miss them? Number one, investment tax strategies. First, let's talk about investment. If you are investing outside of registered accounts like RRSPs and TFSAs, you're probably dealing with capital gain taxes. But did you know you can actually offset your gains with capital losses? This strategy is called tax loss harvesting. Here is how it works. If you sell an investment for a profit, you will owe taxes on the gain. But if you got another investment that is down, you can sell it before year ends to offset those gains and pay less taxes. Just make sure don't buy back the same investment for at least 30 days, 1 month, or CRA will disallow the loss. Here is something even more helpful. If you don't have gains to offset this year, you can carry these losses forward indefinitely, or even carry it back to offset capital gains from past 3 years. This could result in tax refund from previous years. So make sure you check your notice of assessment to see if you have any carry forward amount available. New capital gain tax rules for 2024. Now, here is the major change for 2024 that you need to know. For years, capital gains were taxed at 50% inclusion rate. But starting this year, any gain over $250,000 will be taxed at 67% inclusion rate. Let me break it down for you. So if you make $500 in capital gain, the first $250 gets taxed at 50%, but everything above that will be taxed at the new rate, 67%. This can add thousands of dollars to your tax bill. So planning ahead is more important than ever, especially if you are selling a property or large investment. Now let's talk about housing tax credit. Let's move on to housing. If you are a first-time home buyer, you can claim the home buyer's amount, which saves you almost like $1,500 on your taxes. And here is the pro tip. Even if you've owned a home before, you still qualify as a first-time home buyer if you haven't lived in a home. You or your spouse owned in the past, let's say 4 years. For renters, especially those in BC, there is a BC renters credit, which gives you up to $400 if your income is under $60,000, and if you make between $60,000 and $80,000, you can still get, but it's a little reduced amount. Now let's talk about work-related tax deduction. So if you are a self-employed or a freelancer, you can hire family members to help with your business and pay them reasonable salary. This is a great way to income split and reduce your overall family tax bill. Just make sure to keep good records like timesheet and job description to show the CRA that the work is legitimate. Now let's talk about education and student tax credit. If you are a student or have kids in school, this one's for you. Did you know you can claim tuition credit even if you are studying outside of Canada? Yes, you can. All you need to do is ask your foreign university to complete a T11 form, and you will be able to claim those tuition credit on your Canadian tax return. And don't forget about the Canada's training credit. Yes, if you are between 25 and 65 and earning between $10,000 and $150,000, you can claim up to $1,000 a year in training costs. This gives you a triple the tax saving compared to regular tuition credit. Now let's move to the RESP. The government gives you a 20% grant on contribution up to $2,500 per year. That's almost $500 of free money each year. And if you are in BC, there is also the BC Education and Saving Grants, which gives you an extra $1,200 when it's time to withdraw. The money your child takes out will be taxed in their hands, usually a much lower rate than yours. Now, let's cover some tax saving tips for seniors. If you're receiving a pension, you can split up to 50% of your pension income with your spouse, which can significantly reduce overall tax you pay as a family. And don't forget about the age amount credit. If you are 65 or older, you can claim up to $83,000 or $84,000 in tax saving. Just be aware that this credit starts to phase out once your income exceeds $43,250. How about home tax credit? If you're renovating your home to make it more accessible for you or a family member, the home accessibility tax credit can save you up to $3,000 in tax. You can claim up to $20,000 in eligible renovation costs, like installing a ramp or like a grab bar to make your home safer. Here is the bonus tip. If you're moving at least 40 kilometers close to a new job or school, you can deduct moving expense like transportation, temporary accommodation, and even the cost of selling your old home. Just make sure to keep all your receipts because CRA may ask for them. So there you have it, 9 overlooked tax strategies that can save you thousands of dollars a year. Whether you are an investor, homeowner, student, or senior, there is something here for everyone to take advantage of. If you found this video helpful, make sure to give it a thumbs up, subscribe to the channel, and hit the notification bell so you don't miss any of our future content. And don't forget, tax planning isn't just for tax season. It's something you should be thinking about all year long. Thanks for watching. I will see you in the next video.